This is Justin for Friday, September 18th. Nope, Friday, September 16th, 2022. I'm doing this on Sunday. And so a couple things I drew in here. Well, let me start with just how things opened up. We opened up with a really large bear candle. Um, it's got a shaved, you can't even see it on a 3-minute here. It's got a shaved top. So the high and the open are the same price. And we just spent the whole day lower. But it was a bearish retest gap. So it was a bearish day the day before. We gapped down. That means we could retest, and we did. We totally retested. We rested most of the day. I drew in a couple lines in here in the 3-minute on both the or on all three of these intraday charts. The purple line here is kind of the resistance. So we kind of ran up, we pushed through it once, kind of a false break, and then we just stayed under it most of the day. And then the green line is some support that came in and some hammers here. So there's a hammer here, a few more, like there's one right here, another one here, another one here, and then we get another hammer over here. So the reason I did the two different colors, the purple being resistance, the green being support, and you kind of see they line up somewhat on the 38.75 call that expired also on Friday. So you can see the same kind of resistance, and you can see the same kind of support. Now, this is more of a wedge pattern over here on the call, but on the put, the colors are flipped because it's put, so it's the other direction. It wants to go when you want the stock to go up, the put's going to lose money, and that's what happens. So you can see where it broke the purple line going bullish, the put actually broke the purple line going down. So what's also interesting is the green line is the horizontal one here, but the green line is the one that's kind of got the downtrend to it here. And both have the downtrend on the call because the call is losing value way more than the put. The put was actually kind of maintaining. It didn't really push through the low here. We were going lower, but the premium's getting sucked out of the put. So this is just a really good way to visualize what's happening with the premium. Every time it runs up to the purple line on the 3-minute, you're seeing that purple line get lower and lower on the call, but the purple line on the put is actually holding steady. So instead of the market makers putting more value into it, they're just holding it like, well, here's where it's at. Okay, we're not going to give up. We're not going to. It ran up to here. We're not going to suck a bunch of premium out because it's probably just going to roll back down and pump that premium right back in. So that's what's happening. So then it becomes really key. It's like, when do we see things breaking? Where's it going to go? And we could have just chopped through here all day. When these two angles really line up and give very little room late in the day, it's most likely we're going to have a breakdown or breakout. And so we actually had a breakout because, again, this is a retest gap. So it's more likely we're going to have some buying come in, we're going to break out, go up. And what's also interesting is when we did that, these were some more hammers right in here, some more buying candles. So you had a little bit of a signal that, hey, something's shifting here. You had the hammers here. You also had a bull candle. So I'm pointing at the put. Let me actually share again. There we go. Let's hit the right button now. Okay, so a couple of hammers here and here correspond to a couple of hammers here and here. I really like this one because it's a bull hammer or invert hammer, bullish candle below the 10. And it didn't quite work out, but you don't quite have you don't have a bear. Well, you do have a bear candle, but it's not above the 10, it's below. And then these were bullish. But the idea is, hey, like, this is a good place to go short on this thing. If it were the regular stock, sure. You could short the option. Sure, that could work too. But this is the setup. This is the 10 EMA setup. It's a bull candle closing below the 10. And it actually immediately starts making money. It kind of retests into the 10 and give you more opportunities to get in here or get in a little tighter here. And so that's what we're going to look at up here. So these candles, so here's some bull candles closing above the 10. And this one actually triggered in the very next candle. And because we're looking at options, you can actually usually set up an option to get in on a little bit of a pullback of that option. And so that's why I wanted to look at the 38.75 But I'll show you two things here. So we're going to look at this time of the day, 38.75. Hold on. Zoom in on this. Maximize that. Okay. So I'm just going to hold the cursor here. You can see the range on this is a little more than $1. I like it when it's less. But you can also see what's going on with this option is we're above the purple line. So we're broken through that resistance. We've got some patterns coming in on here, which, you know, this is definitely a double bottom and then like a neckline retest, that kind of thing. So there's a few other things saying, hey, you know, this might be a good place to buy. Now, ideally, I would want to get in like either on this candle, but this is the candle that's like saying, hey, here's the 10 EMA setup. So you want to get in above, but it's the option. So maybe, you know, I'm just going to wait for it to trigger above, and it did on the very next candle ever so slightly. So like 375 by 275, but then that doesn't get your stop below this low. I really want that stop below the low. So the best way to probably set this one up is very quickly, first of all, but doing like 350 by 250. And if you're quick enough, that would have filled on this candle because the close was 330, or the option like between this candle, gap down a little bit and opened at 318. Or I'm sorry, the open was 319, the low was 318. So it should have filled, you know, if you had this candle come in and you take 2 minutes, 3 minutes max to get that set up, then set it with a little bit of a pullback. And if it misses you, it misses you. If you leave it open for a few more minutes, it still would have filled, or more than a few minutes, but it would have filled over here and then ran up. And so if you're getting wicked in on something way over here, there's a possibility that, you know, it may not run as high. So what I usually do there is if I'm going to leave something open, and we do continue up in that direction, then I want to bring that target down some. In this case, if you got set up with buying at 350, stop at 250, and it starts to move, great. Like, where's your target to be? Look left, and this was kind of, you know, retest back up into the low here would be around 7, retest back up into this resistance, that'd be around 7, 8. Probably 7's a good target that would have filled here. If this wick is real, then it should have worked to get in here and get out here. The other thing you can do, again, quickly, is go out a little further to another option that's got a little bit of range. So I've got the same kind of thing drawn. Oh, I forgot to change the colors on this one because I switched over to, I'm like, maybe helping visualize this would be good with the colors. That was the purple, not the green. So here's the purple. And there's the green. I think I did that right. Okay. So you get the same double bottom, and then this candle is 70 cents of range. And so this candle, so you can do like above the high at 260, below the low at 160, and same kind of thing, like look for it to run up into the hammer here, run up into this resistance. Sure enough, it did. So maybe buying at, you know, 260 would have filled on this candle if you're quick enough, or definitely filled on this candle. 265 would not have filled here. Looks like it would have filled on this candle. And then again, you're going to want to pull your target down a little bit. So if you got in earlier, like on this candle, 260, probably up to 5 or 6, maybe 6, and this one going run up to 5. Or you just double the option. So 260 doubled is 520. That would have worked here. That also would have worked here. And that worked on the 38.75 as well. So that's one way to do that. So I am going to get these off of my chart because I'm probably not going to look at these options for a while again. But yeah, so that's one way to set things up. And I'm going to zoom back out on this. I'll get rid of these. But this is one way that I like to look at options and see what's going on in the options and how things could have been played. See, that would have been buying over here. So you're still looking. It's interesting to try and buy it here, maybe thinking it's going to rally. It just chopped into the close, but the option price is all over the place in that last hour or so. The best place would have been to buy it way down here. You can kind of see the double bottom shape here and a neckline, and you know, there's some bigger patterns going on here. But that's some of the framework. So I'm going to leave this on here and see if this kind of plays out into some options. Let me look back at today's or the 16th candle movements and the 19th options or something tomorrow and Monday. But we'll have to see, like, okay, do we have some of the same sort of consolidation? And then do we get the same sort of bullish move? And we should have, it should have moved up. The option's going to move less when it's Monday's expiration, something like that. But it'd be great to see a little bit more of a retest, so a little bit more buying come in, and put in, if we can get another bull candle like this or a couple more like this, and then gap below it, I think that will really hammer home that we're going lower. But right now, this is a hammer, and this is somewhat viable, not really, like more of a retracement, not this is the place to buy. But if we also gap up, then any of the bears who shorted at open, this big candle, anyone who shorted at open here, they're going to get trapped as soon as this gaps up. So look for a little bit more buying to come in if we can open up above this candle. And just trying to think if we have one, something like that where we gapped above a hammer. So like, I'll have to look back and see when we got some more. Maybe something like this. This right in here. We had a shaved top or nearly open and high. Yeah, so this was shaved. This did not end in a hammer, but we gapped. From here, we gapped way up. All we have to do is that same thing, and we're actually a very similar price in here to in here. We're just below 3,900. We're above 3,900 over here. So a little bit of a different place. Here's one where we had like a shaved top and it went lower. I guess I didn't realize there were so many bearish shaved top candles. This one's like the same place. 38.80.94. Today's was 38.80.95. Are you kidding me? Okay, didn't notice that before. So pay attention to this candle and this candle. They are 1 penny apart on their shaved tops. So that price and that price are a penny apart. I don't know the significance of that right now. This one was a bearish gap and go, and we continue lower. This one is a bearish retest gap, and we should go up a little bit just because of the nature of that gap. I'm not really sure what to think of that yet. I want to see what's going to happen tomorrow before we say something so significant here. But if we can spend 4 days below that price and then have a little more rally, or just chop for like 4 days in here, maybe we'll have a little more of a rally back into the 100 here. I don't know. That's just really interesting, that price. Fridays, and what was the date there? 7. Okay, interesting. See, that's what happens when you look at a chart and you realize, oh, didn't notice that before. I'm just talking through it. So hope you enjoyed and hope this helps. This is Justin. Thanks.